Hey guys, it's Cameron here with Emerson House Buyers. Every week I bring you tools, tactics, strategies, lessons I've learned, things that have helped me build up a sizable rent portfolio in about deuces, 2 years. Today I want to talk about something, it's more on the psychology side. So the fact that we like to buy or invest or really do things that have recently done well, and it's called the recency bias is the technical term for that. So in behavioral finance, I'm not going to get too technical here, guys, but I will throw out some terms for you, and you can Google those or find them on Investopedia. But essentially what recency bias is that you have the natural inclination, and it's just a human trait that we can't, it's difficult to break. I'll say this, we easily fall in habit of it, but it's buying things or doing things that have recently performed well. So, an example, Apple stock. It starts doing well. Actually, right now, we'll just talk about Amazon stock. It's over $1,000 a share as we speak and continuing to go higher. So it goes up, it starts doing well. Everybody's talking about it at the coffee bar. Everybody's having a good time. Oh yeah, I bought this new stock. I bought Amazon at 800 or 400 or 500. Oh, and then you hear somebody else say that, and that they made 30%, so you buy Amazon. And then so you tell somebody else at another coffee bar or next night out, and you tell them, and then they buy it, and blah, blah, blah. And it just creates this snowball, almost reverse snowball. It's like a wildfire. It takes off and spreads, and all these people rush into it. And it's the same exact thing what happened in 2007 with real estate. And what happens at the end of that? Shit hits the fan. So this recency bias is very, very, very dangerous. Okay? We want to own and do things and invest in things that have recently performed well. That's the general basis of it. It happened in 2007, almost every major bubble. It happened in almost every major stock crash, market crash. Everybody piles in. And the problem with that is you start piling in too late. Right? So that's how bull markets are created. People start buying into it, and somebody at the end of that is holding the bag. So think about that. All I want to say is think about that currently. Real estate prices have been on a tear since 2012, 11, 12. So at the time of this recording, that's about 6 years. No end in sight. I mean, as of now, prices are still increasing at a above average pace, above the historical average. And now, or at least over the past 3 or 4 years, everybody talks about real estate. Everybody wants to buy into real estate. I know a lot of markets, days on market are low. People are overpaying for properties. Prices are going through the roof. Somebody buys something, pays $300,000 for it, and when they go to sign the closing docs, the appraisal said $320,000. They just made 20 grand. That's madness, you know? So the question is, are you falling prey to the recency bias? Are you doing things that aren't rooted in sound financial calculations and estimates? Are they just because you've heard something and you're buying into it willy-nilly? Now, don't get me wrong. I believe strongly and firmly that real estate is a fantastic investment. That's why I make real estate investments. However, the kicker is some people say, oh yeah, that's a good investment. Yeah, I know what I'm doing. And they get in over their head, and they're doing it because everybody else is doing it. And they don't have any idea what the hell they're doing. So I only pose this question to you just to be cognizant when you're doing something, and this can be with anything, you know. CrossFit was really big for some time. You know, everybody was a CrossFitter. Oh my God, everybody does CrossFit. Everybody does skipping pull-ups where they throw out their shoulder. But everybody wanted to do it because it was hot. It was the hot thing to do, you know. It's just unfortunately, it's just natural human behavior. So be cognizant of that stuff and use this in real estate and in investments especially. But you can use it in your daily life too. I think, you know, being cognizant and aware of some of these subconscious things that we don't even realize we're falling prey to can be beneficial. The last piece I want to mention about that is a survey So BlackRock did a survey of retirement plan participants. So this was recently. They said 66, so 2/3, 2 out of every 3 people surveyed believe that over the next decade, returns on their savings will continue to be in line with what they have experienced in the past, while 17% they believe they will experience even higher returns. So again, we are seeing that this is just one study of many, that we believe that what we've recently experienced is going to continue. And I'll tell you right now, guys, it cannot continue. I don't know when the market's going to crash. I'm not telling you anything that anybody else doesn't know either. Markets go up and down. Everything's cyclical. I'm not trying to scare you out of real estate, but when you think, if you're buying something today because you think it's going to perform exactly how it did for the past 5 years, you're stupid. You are stupid. Because if you know anything about history and over the long term, those trends, it just can't keep up. It's impossible. It's just not going to do that. And I will say something similar. So in 07 and 08, when the market crashed, everybody thought the world was ending, right? So recency bias works favorably and in reverse as well. When things are bad, people are trying to sell everything, get rid of all the real estate because real estate's crashed. It's never coming back. Oh my God, blah, blah, blah. People are leaving their homes or leaving the keys in it. You know, the world's ending. Well, again, that's recency. So nobody wanted to buy real estate, but the savvy real estate investors picked up things on the cheap, 08, 09, 10, 11, 12, and then to the moon from there, baby. That's where it's been. Again, guys, I just posed the question to you. I hope all that made sense. If it did, let me know. If it didn't, let me know. And I just want to pose a question to you. Is there something or anything you're doing, especially investment-wise, where you might be falling prey to the recency bias? Think about that. I hope that you're not. I hope it's all rooted in sound investment advice and sound investment calculations and estimations. But I think everybody can fall prey to this if they're not careful. So hope that was helpful, guys. Thanks so much. Appreciate it. See you next week.